Hello and welcome. This is a video from cryptoml.com where we're going to look at whether or not RSI, Relative Strength Indicator, is a good technical analysis tool for Bitcoin and other cryptocurrency. So here at CryptoML, we use machine learning to look at a variety of data points and technical indicators. We can run on those parameters, millions of iterations on the data to see how these various indicators and data points coincide, how they work together, what their strengths and weaknesses are. And we can use those, we can see how they evolve over time, but we can use them to generate buy and sell signals. But they also give us a lot of insight into how these various technical indicators perform and which ones we should be paying attention to. So before we dive into RSI and how it works for crypto, let's take a look at what it is. So RSI is basically a tool that helps us look for reversals. And here in this chart, this is over at fidelity.com, you see price up top. You see the actual RSI indicator on the bottom. Here we have a 70% line and a 30th percentile line. And what we want to see is as this RSI indicator dips below that line or rises above, that is when we generate a signal. So below this line, that means we saw a sharp movement in price downward, and the signal is, hey, this is oversold. You should consider buying it because there's likely a reversal in the near future. Likewise, if this indicator peaks over the 70% line, we're probably in a situation where price moved up very quickly relative to other price movements, and we may see a reversal and downtrend in the near future. So what we're really looking for, again, is it to go below or above this line. We'll provide a link out to this article, but you're going to see a few more ways you can use this where price may be moving this way and the RSI may be moving this way, which is called divergence, or maybe the opposite. And you also see some information on the calculation. But regardless of all that, it's good to see how this actually plays out for Bitcoin and other cryptocurrency. So let me flip over to a chart here. And what you can imagine is if the RSI says, hey, this is an overbought or oversold situation, it's good for when price is channeling or bouncing between a few points. But if we look at the history of Bitcoin, it can be extremely dangerous. And that is because of this strong price movement we see with Bitcoin and other cryptocurrency. So I think a lot of us know 2017 here, this is a daily chart, we saw really strong movement upward in Bitcoin, followed by the strong bear market we've had in 2018 so far. So if we look at RSI at the bottom with the standard parameter, what you'll see is price was actually moving up pretty strongly here during this whole time. So we have a situation where it's again and again signaling, hey, this is overbought. Basically, it's saying Bitcoin is moving up very quickly and that movement is accelerating. So here's caution. It's moving up too fast. This is probably overbought. You should sell. So the danger here is you would have missed most of 2017, and you certainly would have missed this massive upswing we had there. And if you come down along the bottom, there was no buy signal generated at all. Likewise, if you come into 2018, after this drop here, you did get a buy signal saying it was oversold. So we had this sharp drop. You see oversold there. So you would buy, and it actually looks fairly decent, but we get another buy down here. Maybe it makes sense to accumulate in the long term, but quickly we saw price move up and you get a sell signal here. So this is not too great because we actually had price movement going down. So the weakness of RSI is in strong trending markets, or when you have price moving very, very quickly, it can actually cause you to take the opposite trade of what you should trade. So it can tell you, wow, things are moving up super fast. You better get out of this and lock in profits or look for a reversal. But that, looking historically at Bitcoin, that has not been a great way to trade. And that persists. We're looking at the daily, but even if you get down to the hourly, maybe the 15-minute charts, in general, you're still going to see these strong movements no matter what time frame you're looking at. So RSI can be very dangerous when you're looking at Bitcoin and crypto. There are some exceptions. For example, we are coming we're still very much in a bear market. If I flip back over to the CryptoML dashboard, we do have an indicator talking about the overall, the market conditions, which helps you decide what sort of trades you should take. But flipping over here, what we're seeing is this bear market is starting to level out, and we're actually seeing a lot of price consolidation where you see the size of these price movements is very small compared to what it has been in the past. So RSI is actually going to be a little more effective here, where especially on the hourly chart, you might see, hey, this was oversold, so you could buy in there, and you might make, be able to take advantage of that little bump up in this area. So as long as we continue to channel, RSI might be good, and we'll have to see what happens in the future of Bitcoin. But to the best of our knowledge, we have the history of Bitcoin to leverage and use, and it would say you're likely going to miss out on quite a bit if you use RSI. So I think as a last point, we do see plenty of people who don't use RSI alone, and they may get into much more depth about looking at how this price moves compared to this. But a lot of that can be very difficult to quantify and get super precise and scientific about. And that's where really the danger lies. So if you're looking at a variety of indicators, you're trying to mash them up, and you're looking at some maybe qualitative factors of them. And likewise, you have this parameter of 14 here. How do you know that's really the best? How do you know these are the best ones for all the best indicators to bring in for this situation? Basically, the math on all of that becomes so complex. We as humans are really going to be relying on our own past experience, some hunches, gut feelings. It's very different than what machine learning can do. So RSI, very valuable tool. It's very good for things like stocks, commodities that are fairly stable in their price movement. It's particularly effective when things are channeling sideways, but it's difficult to recommend based on the history of Bitcoin and other cryptocurrency. Not to say it can't be a good tool to consider in your tool belt, but it is something we should be cautious of. So with that said, I think we'll go ahead and close down. You can look for more information on machine learning. In fact, let me show you. We have a pretty in-depth article here about how to use machine learning to trade Bitcoin and crypto. So we'll include that link in the show notes to give you some more information. And with that, we'll say thank you and best of luck on your trading.